Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Today, we had pretty much a flat day on the markets overall. It was very muted behavior, somewhat odd, especially this is options expiration week. Normally, this is Whipsaw Wednesday, where we have a lot of price movement throughout the stocks, institutions moving prices of those stocks to ensure a lot of contracts expire worthless. But we didn't really see a lot of that movement today. So a little puzzling. I almost anticipate a little bit of a pullback over the next couple of days just purely because of this fact. So let's jump into the heat map and go over what we've seen today on the charts. So as we see here, Dow Jones basically flat, down 0.14%, NASDAQ up 0.45%, S&P up 0.19%, US oil chopping around that trend line that we've been discussing for several weeks now. Gold is also falling down a little bit, now down 2%, and Bitcoin still chopping around, essentially flat, but down 0.77%. With a mixed day that we see here, we do have also some red and green here on the charts, but you notice really the green is concentrated amongst some of the larger cap players here in the stock market. The health sector is still under pressure. Finance sectors under pressure. Consumer goods are under pressure. So, but really not much. We just have slight downside in some of these sectors, but a little bit more pressure on the health sector since we are going to be reducing the cost of drugs, or at least bills are potentially going to be put through Congress for that to happen. All right, so let's jump into the charts. First up, we have the spiders. Now, a couple things that are going on here with the spiders. We did move up yesterday above this parallel. Today, we did not confirm a move above it. So still is on watch to see if we're going to move higher in the coming days, in which this area will be support on the spiders right here on this parallel, 583.73. We have not yet confirmed, so support for the spiders is 575.46. One thing I love about charts and patterns, they often repeat themselves in nature. So if you look over here on the chart, you notice that when price action came down and went back up, where did it go to? Not only the 50% area of this parallel, but it went to this previous low pivot right here from January 25th. If you notice price action right there drags straight across to it. So now we've moved down and moved back up. It would almost make sense for us to pull back and come to this pivot, because that would be almost a mirror image of what happened in the past there on the spiders. So the likelihood of a pullback is actually greater than to continue moving up in this fashion. Into the Qs. The Qs did push higher today. Very nice move on the Qs. Right now, this is all price being extended. This is further providing insight to me that we likely will pull back in the coming days, as there were likely a lot of call options purchased over the past week or two with price movement going up like this in the stock market. So institutions likely will pull price back down on the Qs before hitting the 525.03 level. Into the SMH. Now the SMH, this is really curious. The SMH continues moving higher. As I notated before, this high area on the charts right here on February 20th was the all-time highs on the S&P 500. So we're getting ever bit closer to this area. But today, the high on the SMH was $249.44. Notice the 886 retrace of this move was actually $249.42. So just it pierced that level by 2 cents and then pulled back and chopped sideways throughout the day. If we do get through this area, next resistance is going to be that top end of the channel at 260.05 cents. Into Bitcoin. Bitcoin, as you see here, has really been chopping around right here in a bullish consolidation manner. So far, it's reminded me a little bit of each one of these stair-step moves up. However, Bitcoin is right now overbought in the near term, so the likelihood of Bitcoin going higher is actually less than going down. Going down has higher probabilities, just so that RSI evens out, allowing more momentum to gain in Bitcoin before potentially moving higher. Gold, as I said, was headed down today, down 2%. And then we do have this trend line that's getting ever bit closer here at $3,100 on the chart. Next area of support beyond that is going to be the top end of the parallel, just over $3,000 at $3,080. Into silver. Silver still remains in this area, but this big red candle raises a little concerns for me, as this big red candle showed that price action did not get above it. In this area, price action will have to do a lot of work to get back above that red candle. So still really in the middle of no man's land right here. All in all, chopping this way, the more consolidation that happens, the more likely we are to break up. But to get above this red candle and this red candle will take significant buying pressure for silver. Into oil. Oil, as we've discussed, this trend line is really the line in the sand on the charts. For us to beat this trend line, that would be very bullish for oil. So my eyes are all on price action right in this area. But this is to be anticipated that we would at least have a pause day here on the move up on oil, as it has moved up several days in a row. This is all a time count too, for those that know time counts. 1, 2, 3, 4, 5, 6, 7, right into a trend line. It's a very powerful move, often precedes a fall right there on the charts like we see. Now, natural gas is also pulling back today. Since it did move up and confirm in this area, support is going to be here at $3.60. And moving a step or two ahead, you can also notice that should we get support and a bounce right there, this trend line will then become resistance on a move up, right about $3.90. And should that break, that would be an inverse head and shoulders pattern that would propel the cost of natural gas much higher. Many steps yet to go on that, so we'll wait to see if that happens. Now, here next into the 10-year yield. This is something that's very intriguing for me that I see. We do have Jerome Powell with the Federal Reserve in the June meeting has a 90+% chance of no rate cuts in June, but that changes for meetings following in the year. This 10-year yield is raising concerns for me, and I often think that will happen too for Jerome Powell. Once we get more inflation data, if the 10-year yield continues to push higher, I think that percent chance, as I mentioned, right around 90% chance there will be no cut in June. I think that percent chance will be reduced dramatically should we break this trend line. Right here that you see this trend line that I have drawn across the charts. Now we are in an extended move to it. However, if we were to get above and then confirm above, this would be an inverse head and shoulders pattern with a measured move, and hold your breath, it's all the way up here at 5.289%. So this move up has in essence been 2 rate hikes in the market for interest. It is not very good for anybody interested in getting a home or any other large purchases such as cars. But if we start pushing higher and reaching that area, that will almost bring the housing market to a standstill in the near term. So we'll keep an eye on this trend line right here to see if it is broken and confirmed above. Next up, AVGO. Now, AVGO, talking about inverse head and shoulders, it's almost like these are displayed on many, many charts that I'm seeing now recently, especially with our dramatic fall that we had in April. So as you see here, we have a left shoulder, a head, and a right shoulder. This trend line represents the neckline of that head and shoulders pattern. The measured move was accomplished yesterday on the charts. Doesn't mean that price is going to immediately stop here, but what this does mean is that it's starting to exhaust itself, that the probabilities start to shift more towards a move to the downside, simply because what was displayed on the chart was already accomplished. This move was foreshadowed right here with this pattern. It already was accomplished. And so the likelihood now shifts to go down, especially when you combine it with other factors like this down here on the bottom of the chart, RSI now sitting at 75 on the daily. Into Tesla. Tesla's move up, a fantastic move up. You see this bull flag and breakout today that we saw continue to move higher. Now, if you look on the charts, you can see where price action stopped. I pull my Fibonacci retrace sequence, put the first bullet right at the top, come down to the lows right here, select that low pivot, and look, the 50% retrace is at 351.39 cents. I imagine right now, over the next few days, we will start having some sideways consolidation, if not a minor pullback right down here to the support level of 298.14, which would be a good buying opportunity for a long on a swing play for Tesla. Into ARM. ARM today also is pushing higher, just like much of the technology stocks out there. But if you notice right here, we had a low pivot that was back in January of this year. And if I string that all the way across, that ended up being the high point for today's price action. Also, RSI is near the top of the extreme overbought gauge. So we may end up starting to have some consolidation in this area. However, this is not as overbought as Tesla. So we still have a little bit more room that could possibly run up into this bottom end of the parallel channel, right around 147 and 44 cents. Into AMD. This chart I think is fascinating. Whenever I'm able to string a long-term trend line through major pivots, usually the third hit of that trend line, which is 1, 2, now 3, is a significant area of resistance on the charts. So combine that with the fact that you have RSI poking above 72 right now. That all tells me, just like the Tesla chart, the likelihood for a pullback is very high on AMD. Doesn't mean we're going to new lows. It just means that this stock needs to cool off and has had this beautiful diagonal incline right here that you see on the charts, almost creating a mountaintop on the left side right here. So right now, AMD is likely overbought in the near term. First support area on it is going to be 111 and 69 cents before it tries to attack this trend line again and get above it for a breakout. Into Archer Aviation. Now this is a small cap stock. It's not profitable. However, they announced that they do have plans to release one of their new quiet electronic aircrafts. And these do vertical takeoffs. They're pretty neat instruments. They do take and transport individuals as well as supplies. And in the UAE, it will be released this summer. The United States, we still has not passed FAA regulations. It's still pending. But you see here yesterday's price action. Price took it all the way up 25%, and then today followed it up with another 6% gain. What that does is it changes this trend line into support for Archer. I'll be waiting for price action to come back down, retrace to this level to buy for a long play on a swing trade. And you can see here too, RSI in the overbought territory. It's likely needing to at least consolidate or have a decent pullback right here for a good buy for a long opportunity. Very low risk play there too, because if price gets underneath that trend line, you simply can stop out. Or if you go light, you can just add at the next support areas, which will be this accumulation of all these pivots right here at $9.20. All right, so tomorrow we have the PPI data that's going to be released at 8:30, as well as retail sales that will be released at 8:30. For those that don't know, the PPI is the producer price index. So that's more on the consumer side of things. So we'll see how the companies are dealing with inflation measures, if those inflation gauges are coming down or if they're going back up. But still, inflation information to be digested tomorrow. So be anticipating some potential early morning volatility coming at 8:30 in the morning. All right, that wraps up trading the close. I do have a short message from Lawton regarding Blowfin, so enjoy that. But other than that, hope you guys have a great rest of the day, and I'll see you all tomorrow. Take care.
Hey guys, Lawton here with Verified Investing, here to talk to you a little bit about Blowfin, our preferred crypto exchange. It's the only crypto exchange we've ever partnered with and the only thing we use when we're trading. You can watch us day trade crypto live, and everything is through Blowfin. And I want to tell you a little bit about the different collaborations we have with Blowfin. This past weekend, we just finished up a campaign where we matched up to $500 for new members. So that means if you signed up and put $500 in, we gave you $500 in free futures trades. Of course, it's non-withdrawable, but the profits definitely are. Let's take a look at the computer and let's see what's going on in the crypto markets today. So taking a look here, you know, my favorite thing about Blowfin is that it's integrated with TradingView. Everything looks the same as it would on my computer. And you see I have this nice upsloping trend line, and I'm looking for a short on Bitcoin. For me, just looking at this chart, maybe I'll look to short it around 2% higher, closer to that 99,000 level. But by the time you see this, I might be totally wrong or totally right. But anyways, thank you so much for watching. Thank you to Blowfin for working with us, and I hope you guys have a great day.